It's said that Elon Musk has experienced a lot of stress after he bought Twitter so that he played video games all night. And I think he might be in a similar mood now because I think there's going to be price wars, and there are price wars already with Tesla. And he's responding by increasing the prices of some models, the Model 3 in China. He's redesigned the Model 3. It has longer range. It gets 377 miles per charge. And he's raised the price in China by about 9%. Okay. And it also has a sleeker design, and it has an ultra red color. If you want to get more speeding tickets, you can get the ultra red color. And it has a rear screen for the back seat that's a touch screen. So he's redesigned it, given it a snappier look. The self-driving, the supposed self-driving, actually the driver assistance program, has been reduced in price from $15,000 to $12,000. I think when I bought it in 2020, it was $8,000. So I actually priced out what this model would cost with all the extra features, and it comes to about what I paid for it in 2020. So Musk, he's played the market like a fiddle. He increased the prices, and now he's decreasing the prices, and he's especially decreasing prices on the Model S and the Model X, the luxury models. And the Model X now qualifies for the Inflation Reduction Act's $7,500 tax reduction. So that's going to increase sales because it's below the $80,000 limit that the government placed on SUVs. So he does a remarkable job at marketing and knowing where to put the price. And I think it's going to continue to be successful, although it is worrisome that he has to do this. And I think it's a sign of not good things coming for the economy. And the technology news is not reassuring. Broadcom is one of my all-time favorite stocks. They make complicated chips for artificial intelligence and different network things that are very important to the internet, involved in the infrastructure of the internet. And they reported earnings that beat expectations and revenue that beat expectations. But it would have been a negative quarter except for artificial intelligence. Artificial intelligence saved them. And they point to the increased cost, and I'm sure part of those increased costs is how much it costs to install artificial intelligence in your system. And also they have stiff competition. So they reported a positive quarter, but their forecast for things going forward was not encouraging. The main stress for the economy right now is that the money supply is contracting meaningfully for the first time since the Great Depression. We're not talking about the 2008 Great Recession. We're talking about the 1930s Great Depression. Unbelievable. This is due to their increasing the money supply during the dark days of the health problems from 2019 to 2021 or 22. They increased it by 38.5% total. Think of that. You increase the total amount of money in the economy by almost 40%. No wonder we have an inflation problem. Milton Friedman said that inflation is always a monetary problem, that they're printing too much money, and it's mismanagement, unbelievable mismanagement. He was notified of the problem, and it took like 6 months after being notified and it being just obvious as the day is long. It took 6 months saying, oh, it's transitory. What baloney. And the economic news is complicated and anything but reassuring. Early in the week, we found out that the JOLTS numbers, which measures the amount of job openings, now it was up to like 10 million job openings, which indicates a very hot economy, okay? You have 10 million jobs. There's like 2 jobs for every person. There's 2 job openings for every person looking for a job. But now it's come down, and it came down to 8.8 million job openings. Now that was 300,000 less than what was expected, which is really good because they want the economic news to just be a little bit worse. So it brings us down gently for a soft landing so we don't crash. Okay. And then we got PCE information. That's the personal consumption expenditures, which the Fed likes to rely upon a lot. And it came in at 3.3% year on year, which is what was expected. It was expected that it would be 3.3%, which was great. And then we got core personal consumption expenditures, core PCE, which came in at 4.2%, which is exactly what was expected. It was expected to be 4.2%, and it's heading down to the low 4s. And previously, it was having trouble getting below 5%. So that's really good news. But then we got a twist at the end of the week. Now, so far, we got news that's either in line or just a little bit worse. But then towards the end of the week, we got the gross domestic product. That came in a little bit better than expected. It came in at 2.1% quarter on quarter. 2.0% was what was expected. So that's just a little bit better. And that's not to worry. That's to reassure us we're not going into a recession. So far, so good. Things are either in line or a little bit worse, which is just exactly what we want for a soft landing, right? But then at the end of the week, we got the jobs numbers. And it was a surprisingly high jobs number of 187,000 jobs added to the economy. Okay, they were expecting 170,000. That is major. And the really puzzling thing is we got more jobs added, 187,000, but the unemployment rate went up. It was 3.5% unemployment, and it went up to 3.8% unemployment. What is going on? It turns out that the number of people looking for a job increased. In other words, people are running out of their personal savings and they're desperate for money. And so a lot of people are going back to work or looking for work that would not be looking for work if things were better. And so I think this number to jump from, it's been at 3.5% for the longest time. Then all of a sudden to jump from 3.5% to 3.8%, I think shocked everybody. Okay. And the thoughts started to turn towards, maybe the bad news is going to start being bad news. Instead, it was too much worse than what it should have been. They would have liked it to be 3.6, maybe 3.7, but 3.8, that's a major jump in a month's time. And I think it was too much for the stock market. And the NASDAQ actually closed Friday on it closed negative on Friday. And that's despite those previous economic news being relatively good. But I think that unemployment rate scared people. And the personal savings has been going down, and I think people are getting desperate, and they're returning to getting a job when they probably wouldn't be looking for a job otherwise. Please like and subscribe because it really helps the channel. Well, at least we have Barbie, the Barbenheimer movie, Beyonce and Taylor Swift stimulating the economy. And it's just amazing how travel and leisure is really hanging in there. Americans are very reluctant to downgrade their spending, which is different from the Chinese. When things get rough in China, they do stop spending and they save. But I think our spending days may be coming to an end pretty soon. And when it happens, it tends to happen fairly quickly. We're starting to have job decreases, and that is just at the very beginning of starting. But usually these things, they come on like an avalanche. And when they come quickly. And I think it's going to be a surprise to many people. Thank you.